Welcome to the Tons of Industry Show. Today I have one of the most popular guests we've had on. This person has been on many shows over the years. He worked for the biggest banks, and he now consults for some of the wealthiest clients on the planet. Charles Nenner is with us today. Charles, thank you for being here.
Nice to be back.
I want to start off with obviously what's going on in the markets. Can you comment in generally on what's going on right now and on the technical front where we're at right now with the S&P 500 below 2,700? Where do you see this going next? We are recording this interview on the 10th of December, so it's definitely something that is going to be timely. We're going to release this interview ASAP. So why don't you tell people exactly what your thoughts are right now?
Well, we were out of this whole move. Was not very complicated. If they want to know how, they can always go to Charles and the research and ask how the top was calculated. And for the moment, we're looking for a short-term low on the 14th of December. We were looking for a downside target in S&P of 25.55. We saw 25.80. That's pretty close. So things are getting pretty close for a bounce. So we still might have a bounce into a year-end rally, but there's no good low in this market until the end of the first quarter of next year. Then we have a tradable up move, and then it really goes down into 2022 much faster than it did till now.
Now, I want to ask you this. The two very distinct strategists on Wall Street, one from JP Morgan, the other one from Bank of America, they draw two very different forecasts for 2019. JP Morgan's chief strategist, he's calling all of the people that are talking about a recession. He actually went on to say this is fake news. There will be no recession in 2019. I see a very bullish front. EPS growth is at record highs. Companies have a very high guidance. The S&P 500 is fine. Nasdaq is fine. All of these geopolitical issues will be solved. It's all noise, and we're gonna rally in 2019. On the flip side, Bank of America's guy is talking about the first half of the year being the breather, taking a breather, starting to solve these geopolitical problems, and he's calling the second half of 2019 the last hurrah before the market tops, and then he sees a bear market basically, or sideways market, but a very bad time for equities regardless. I want to ask you a different question. Whether or not one of them is right, or both of them are wrong, what do you think will happen to inflation in 2019? Because we're seeing gold starting to rally here. We are not seeing oil rally at all, and we're not seeing silver rally, and we're still seeing a very strong dollar. So I wonder, after a year that the U.S. dollar has been the best performing asset in the world. Basically, all the hedge funds could have taken a sabbatical this year and the clients would be better off. What do you think will happen in 2019?
Well, can I first give some comment about all these people that have the forecast? The problem is they don't show you how it's being done. We always show how it's being done. May I give you a couple of examples? Okay. So I give you a couple of big examples. We do much more work, big examples. Let's take the year that ends with a 7. So how do we know the bull market is over? Because 2017 was the year that ends with a 7, right? So at the end of a year with a 7, a bull market is over. That's why we sold everything in January. Now, if you go back 10 years, it's 2007. Well, everybody knows 2007-8 was the end of the bull market. If you go back, the next year with the 7 was 97, 98 was the Asia crisis. If you go 10 years back, was 87. Everybody knows about the crash. If you go back 77, you have 100% correlation of a year with the seven. Now, don't ask me why it works, right? Because I don't know that. But you have to show people why you think what you think. I give you another example. Not everybody knows about Fibonacci, but there was a down move from the top of 2007 into the low of 2009, right? Now, if you want to try it, anybody wants to try it, if you take the length of the down move from the top of 2007 and 2009, and you multiply it by the Fibonacci 2.618, you get exactly the high of the Dow Jones in January. That's how you do it. I give you one more example. If you make an exponential chart, I don't know, everybody knows how you make an exponential chart, and you start in the 1900s, then you can connect the high of 1929 with the different highs of 67, with the high of 2000, and the high of 2018. One trend line. That's how you do it. Now, all these people have all kinds of situations. It's very funny. I was on CNBC on Monday in London, and I was showing that we were short the crude from 75 and explained to them how we calculated it. Now, after I was finished, I was on television, on Iraqi television. Can you imagine? And he says, what do you think about OPEC? So I says, well, I'm not an expert on OPEC, but I can tell you what happens to the oil price. But since they don't think that way, they continue to ask what's with OPEC. So it didn't really work out. Then a couple of hours later, Manila from the Philippines, I was on television. They all picked up on CNBC. They want to hear me. So I said, you know what? I'm not going to try to explain to them what is important is the oil price. I'm going to talk about OPEC. Before I knew, I talked about the Kurds and Saudi Arabia and Russia and United States, and I became an expert on politics of the Middle East. Then came Bulgaria television. I did the same thing. And then, behold, in the United States, they start repeating what I said. And I don't even know what I'm saying. So it's very simple to bring something into the world. If you don't prove it, so I'm very not impressed with all these people who just make up a story. I want to see how you calculate it, not how you say it. Now, back to your question. The question was the gold and inflation. The gold is now we're the 10th of December. In 1 or 2 days, gold is going to turn down again, but it's in a big sideways move until the middle of next year, and then it's really going to take off. The inflation is also very simple. You got a 30-year inflation cycle, and it topped in 2010, and it's going down, and has been like this for 300-400 years. Now you can make up all kinds of stories, but let's start this with inflation cycle. So we're going to have deflation because we have 2% inflation, and if the economy turns sour, which at one point you can discuss when it happens, but of course one day it's going to be recession or depression, then you go maybe below zero and you have a deflation. That's the big thing that I'm talking about for years. So it's not what it seems like. Now, talking about what I think JP Morgan said about the profits of the companies are good, he thinks he's the only one who knows that. No, people know that it's already in the price. You have to say something that nobody knows. Then maybe you can predict the market. So everybody knows about the profits. The insiders know the profits are not going to be good. I don't know how he calculates that, but I know how to calculate it, and the profits are not going to be good. I give you one last one. The famous Buffett indicator. What is the Buffett indicator? He takes the total capitalization of the market divided by the GDP. His indicator is more extreme than in 2000. Those are facts without making all kinds of story around it. So I don't know. I cannot agree with these people until I see how they calculate it.
Now, Charles, I want to ask you with regards to specifically silver. We're seeing an 85 to 1 ratio between gold and silver. This 85 to 1 ratio has appeared 3 times since gold and silver were detached from the US dollar in 1971. It's a very rare extreme for silver to be this cheap compared with gold. And what we've seen is the last 3 times that has happened with an 85 to 1 ratio, silver has started to close the gap But when silver outperforms gold in a major way, the junior mining sector, the small cap gold sector, or just the mining shares in general, they tend to be very good performers. We saw in 2016, in the first 8 months of the year, when there was a big short squeeze in these miners that investors use as a hedge when they go long the S&P 500 or the Nasdaq, etc. There's a very inverse correlation between the Nasdaq and commodities. Are we going to see a reversal for commodities after 8 very brutal years for commodity investors? Do you see that happening as the market goes down, as we enter slowdown? And how much of a role do you think the Chinese economy will have in the next decade between 2020 and 2030, and how much is their one world, one road, one belt initiative important to the commodity super cycle?
Well, first of all, the super cycle just continues the way it is. Every time in history, there's a different reason, but it just continues what it is. I just brought up silver. The funny thing is, we were long the small gold stocks, and we're selling now because there's a top in gold. I just brought up here my long-term cycles, and if you want to write it down, it says my cycle bottoms the middle of June in 2019, and it could even go to $10.5. So what I would do is then I buy or $10.5 or in the middle of June next year. And if it comes together, then it's even a high confidence trade. So we still have to wait with the silver. It's coming. It's coming. And then I see it's going into up into the end of 2023. But it's still too early. Now about China, I mean, China really, they have problems getting with the money supply. They have problems, I guess, because it's still a kind of a dictatorship. They can get themselves out of it. So I'm not too worried about it. What it will do to the silver price or the commodity price has nothing to do. You cannot change the super cycle. The super cycle is like 250 years old. And it's not that doing some changes, also the Fed or whoever does some changes will change the super cycle. That's why it's called the super cycle. So I always urge people, why don't you stay with all the cycles and forecasts until it's proven wrong? Because it's never proven wrong. If you're a person that has a problem living, let's say, in a fixed idea about history, and it says, well, I don't like my life because I want to have an enthusiastic life and everything can move at random and anything can happen and that makes life livable, that's good, but it's not good for investing. Investing is take indicators that always work or almost always work and assume that they continue to work until proven differently, and that's how you make money.
Charles, I want to ask you how all of this plays into politics. You and I, we spoke a number of times. We always keep it to economics. We always keep it to finance, but and to investing. Can I ask you, how do you think these trends going forward will impact politics? We already see huge riots in France, and these are not, these are not small and contained. We're not talking about 1,000 people that are rioting. These are hundreds of thousands of people in one of the major capitals of Europe. And I want to ask you, we've seen this in many other European capitals over the past decade. Now that the U.S. is going to slow down for the first time probably this decade in a major way, what do you expect going forward? Because there's an election not too distant in the future in the U.S. And I want to ask you, what are your thoughts in general regarding politics within the U.S. as we enter a decade where the baby boomers are going to retire in even bigger numbers? While on the flip side, you see a lot more millennials voting, and obviously a lot more millennials at peak earning years. So there's a really big transition here between the cash and the wealth that the baby boomers have accumulated for 5 decades and the new wealth that the millennials are now starting to accumulate, and how this all plays into the role of government and who politicians need to cater to.
Well, Again, that's not my expertise is to tell you that there is a social unrest cycle about 55 to 60 years old, 60 years old, and that's what's happening. So in the 60s, you had the last French uprising, and it took the whole of Europe with it. And now, 60 years later, we have the same thing. And if you go 60 years back, you have to look at history. If you look at social unrest for the last 500 years, you find it. I usually like to prove this by war cycles. There's an interesting war cycle of 100 years. So I expect that there's going to be more wars now because the war cycle always picks up in the middle of the first decade of the new century, which is now 2015 to 2020. 100 years ago, it was the First World War, which ended in the Second World War. So that worked. Then it was 1815, it was Napoleon. Then 1715 was the Hamburg's War. Now, if you Google just a matter of interest and you say big war around 200, around 300, 400, it always is in the middle of the second decade of the new century. Why? Nobody has a clue, but you have to know these things. So I would say if in politics, I have the same thing with the now. It starts to be a bit difficult with the overheating of the Earth. They take into account everything except the cycles in heating of the Earth. So there is a 300-year cycle that has been there in effect for 5,000 years. And how we know that? Well, we know it from fossils. How do we know it from 3, 4, 5, 600 years ago? Well, you look at paintings and you see how cold it is when they paint everybody skating in Europe, so you have an idea what's going on. And the cycle is just about to stop, and we go into an ice period. But they look at all kinds of nonsense, except of maybe there's a returning cycle of overheating and getting to an ice period. It's a total different look on reality, but it's so different from what people think you cannot even bring it up. So the same thing with social unrest. Whatever happens, whoever comes to power has nothing to do with it. Now we're going into years of social unrest. And I think that in most countries that the danger from within is even more dangerous than the danger that comes from outside.
In the U.S., do you see a situation where the states want to secede from the union? We're talking more of the Trump hating states like California or Illinois, or New York. But what I'm asking you basically is, do you see a situation where these states say, hey, we want our own currency, we don't want to depend on the federal government, we have our own issues and we need to solve them on our own schedule and budget, and therefore they'll look for their own bonds to issue, or public projects backed by bonds, or a local currency. It's obviously been done many times before Lincoln took state coins out of circulation and made them illegal. But before that, we had 8,000 different state issued coins. Do you think that this is a probability if the dollar goes into a bear market here?
Well, again, anything is a probability. I can only answer these things maybe for next time if I do research. How many times these things happened in world history, and if there is a pattern every so many centuries, it's going to happen. Otherwise, I would talk around like all the other guys from the banks that, they make up a story. Could be true, could not be true. We don't know that. So what I usually do is, as a scientist, is I have to look at the different periods and see if there is a returning cycle. Now, if there is a turning cycle, then the answer would be yes. If it's time for this to explode, the answer is yes. But I never looked at it.
If you had the floor and you could broadcast to every person on the planet a message regarding his or hers ideas of what's going to happen in 2019 and 2020, the next 2 years, you had the floor for 5 minutes, and you can tell them, hey, I think this, and this are going to happen, and this is going to impact your life in a significant fashion. What would you tell people? What's the most important thing, the highest priority things, and how to act accordingly?
I gave up. I have nothing more to say. I give you one example. I've been managing director at Goldman Sachs for 15 years. I did all the research for the prop traders. People made appointments months before. Now I have my own firm, and people don't understand the value. They don't listen. They, there's, I don't know what it is. I tell people, look at the research, look, write down what we say, and make a choice if these systems work or not. This is how the world functions. I've had no success, only with the big guys, the big banks, big institutions. I gave up. It's a good question, but I don't try to do anything or say anything anymore. I simply cannot do it. I won't say I failed. It is just on Sunday I gave an example about when I was an intern doing psychiatry because I'm a medical doctor. I gave an example of the shark. There's an experiment that you put a little shark in a big aquarium and you put a glass plate on it, and the shark tries to get out, but he hits his nose against the glass plate. He sees through it, so he doesn't really know the glass plate. So after a week, you take away the glass plate. So now he can go out, but he doesn't try it anymore because he remembers he's going to hit his nose. That's what happens to population. Maybe when they were young, they tried and it didn't work out, and now nobody wants to try anything anymore. They just want to be part of the safe society and do what everybody else does, and you can't get them moving. I see now what happens in talking in Europe about immigration and all the problems we have over here. So I would like to say something, but it's not that I'm almost 68, and I decided until now I haven't had any influence, and I'm never going to have it. Probably not the answer you expected, but that's what I decided.
Well, I definitely know the same feeling and the same story. It's it's a baby elephant in my case, and it's just sort of these circus elephants, and they tie him with a rope, and obviously because he's a baby, the rope is strong enough, and so once he sees he can't get loose, he gives up moving from that rope. Now the circus manager doesn't change the rope through his adult life, but as an adult elephant, he can snatch that rope in a matter of seconds. But he doesn't even try because he has that memory from back when he was a child that he couldn't do it back when he was a baby elephant. Um, so okay, well, I want to ask you in closing, Charles, are you surprised at all by what's going on with oil prices, or is this something that's in the super cycle? And then what is next for oil prices? Because oil is a very important commodity in terms of where the world goes, not only economically but politically. Obviously, in the U.S., cheaper oil prices are very good for consuming, for the consumers, for discretionary incomes, and in other places of the world, low oil prices can actually topple economies. So, why don't you please explain what's going on with oil prices and where do you see them going forward according to the cycles?
Well, first of all, try to remember that when there were a lot of fires in Russia, the wheat prices went through the roof. And since Tunisia and Egypt were the biggest importers of wheat, the Arab Spring started because people couldn't afford the wheat anymore. There are a lot of countries who are based still on 70, $80 oil. And if it's not there, they're going to have a big crisis with the population because they can only bring in money by selling oil. Now, the oil, I will tell you very exactly, we went short on 75. Again, if you want to know why 75, just ask for the research. We show it to you. And we're still short. The low is in about 10 days. And on the March contract, we have a buy stop at 53.50. And we should have a bounce for 1 or 2 months. But for the rest of the year, we're going to have lower oil prices, maybe as low as 35, 36.
That's really, really a repeat of what we saw a few years ago. Um, what do you see? How do you see this affecting politics? If I needed to ask you that question, I know it's not your expertise, but how do you see it impacting politics? And do you think there is a chance for a real conflict between the U.S. and China that escalates beyond tariffs and will end with that?
Well, I have been on television for years saying there's going to be a big conflict between U.S. and China, and I said it's going to be about the artificial islands that China is making. My war cycles go back 3,000 years. They start with the Mandarin Empire in China. That's not why I expected China, but it has to be. There has to be a big war again. Again, if you look at the 100-year cycle, you see there has to be a big war. I think the Middle East is already incalculated. It's not going to come from there. Things always come unexpected. Um, Something is going on over there because for years, if you look at the aerospace industry in Vietnam and in China, it was really exploding. So something is going on over there. With Korea, we don't know what to expect. So it's time to be very careful. And I wish that presidents and Congress and senators would have some he says historical idea about how these cycles work and how history develops. So they have an idea what to expect. Like Macron in France, if he would know about the social unrest, he knows that this is a time it starts and it's not something going to stop on a dime. So he could prepare himself. But people live from day to day and they have no historical understanding or they don't take the time, especially in financial markets. You have to do some homework instead of listening to the media, to CNBC or whatever. Just take some books on history of financial markets and take the time to study it. It's like my son, who's a good chess player, who likes to play chess. I says, if you play less chess and you read some books about chess, you improve much faster than you play chess the whole day. So you really have to put some time in it. And I wish that our politician would do the same.
You know, Charles, in closing, I want to ask you, where can people check out more of your work? Charles, in closing, I want to ask you, where can people check out more of your work? Where should they go if they want to check out the services and research in detail?
Well, they can go to charlesnenner.com or Charles Nenner Research Center. For a while, you get the research for free because we're very easy. Things prove itself. Let's see if you like it, if it's helpful, especially in these times. And then you can always say, well, I want to have a subscription. If there's certain things you want to know, let's say about the oil price, how it's been calculated, or you want to see that interesting line connecting the tops from 1929, or you want to know interesting how did we calculate the top of the Dow doing this Fibonacci extension, you go to the website and you ask specifically for these things, and they will send it to you. And it really gives you an idea how much is possible in trying to predict financial markets.
Charles Nenner, thank you very much for taking the time today, and happy holidays.
Happy holidays.